G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Be sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So we'll be going over the stock market today's video. Okay, for Tuesday night's video. I want to change up my content a little bit and sort of reduce the amount that I'm posting. And probably makes, these slightly longer videos. They're like the 20 to 30 minute range, or potentially longer if I'm doing in-depth analysis on the charts. And I want to do Tuesday nights for stock market, Thursday nights for Bitcoin, and then Saturday nights for the altcoin market versus Bitcoin. We'll see how that goes, but I want to schedule it like that to go over, to break it up a little bit every second day, 3 days a week, and then I'll see how I go and how good I am at editing to make some short videos. So just make some clips out of those videos and post those to my YouTube Shorts section, my page, and then potentially look at posting on TikTok. But I'm not really a fan of TikTok. I don't go on it, I don't use it. And that is something that, the mass audience are on TikTok, so I can't really deny that. And the majority of people do scroll it, and it's handy to, use that sort of short end content to bring him to watch my long form content. So that'd be a possibility of me doing that. So make it three times a week videos. I got more time during the week after work at night to cut up and make shorts. Okay, so that's the go there. So we'll see how this goes. And this is where I want to form my content now. I don't want to go too extreme every day of the week. It's just too much. And it's too long and too exhausting, and people just want instant gratification, and I have to supply that demand. Okay, so we'll be working towards that one. Anyway, this video, we'll start with the stock market and going over fear and greed to begin. As you can see, we are in fear territory, and go to the timeline as I like to do. And this is the S&P 500, not the NASDAQ, just so you know. And you can see historically, a year ago, this is not very historic, but it's where we are. We're currently at 44. So we had this sort of trough area around 17, then the 20s, early 20s there in August, earlier this month. And now we're coming out of it as the stock market is rallying quite sharply, aggressively to the upside. And we're heading back to these levels back in sort of late July. It's mid-July top for the price. So the fear and greed is coming back up. So it's getting more greedy eventually. We might break the 50 level and we continue higher. We have to wait and see. But as you can see, it is trending down. Okay, so there's a high, lower high, and lower high, and another lower high. So it is gradually going lower, if you want to look at it that way, or you want to see it as this is the V-shaped recovery, and we're going higher, and we're going back up to these top levels, extreme greed. That could potentially happen as well. So anything can happen. That is what's showing, and these levels we visited, from sort of start of August, okay, which were pretty much extreme fear right below the 25 level. As you can see, the arrow there. And it was pretty much similar to September of 2023 into October. So that sort of correction end of 2023 we had. And we had this sort of similar level, and now we're coming out of it. Will we come back and revisit it? I do think we will visit it at some point in the future. I don't know how soon, but only time will tell. I'll have to wait and see that one. That is where we are at the fear and greed. So we'll go over a couple of tweets now. And with the great Mark Tias, this guy is the perma bear, the stock market and crypto market, and he's making comparison of Dow Jones versus gold from 2008, and the same two pairs for 2024. So gold full lines every time. Well, just for these two times, or what we got now in 2008. So we'll show you the 2008 comparison. So you got DJI, Dow Jones Industrial Average versus gold on the daily time frame. And you can see the pattern there. We both had this obviously big surge up from 2005, and then you got 2008 and 2008. And then we had gold, had a lower high here, had a high and lower high. And you had Dow Jones, had a high and a higher high. So a bit of a divergence there. And then gold signaled that that was the top, and we came down, and so did the Dow Jones. But the Dow Jones came down first, okay? As you can see, before 2008, 2007, all right, towards the end of that year. And then it was only until 2008, just past it, going pretty much mid that year, 2008, it started to drop. So gold dropped after the Dow dropped, okay, as you can see there and there. And as you can, if we match up that exact date, but we can see that gold had that lower high and that higher high at the Dow Jones. And we had a similar pattern, really. So we had these little cluster highs and this consolidation. We had this here, 2005. We had a push up. We had a peak here and a correction. We had a peak here, correction, right? A little bit earlier for the Dow, as happened to gold. And then Dow rallied. Gold caught up. And then it both sort of got to this level around early 2008. And this one was a lot sooner. It was June of 2007. And I said it's a 6-month lag there. And Dow Jones let the gold down and a big crash up and after that. All right, so that was that one. And 2024, obviously this year, we're seeing sort of similar correlation between gold and the Dow Jones. And so 2023, we had this correction here at the end of that year. We had the correction here. So at the end of that year, okay, sort of Q3 to Q4 sort of thing. But gold didn't correct as much. And the Dow led the rally up. Then gold rallied shortly after. Big move. And they've been in this channel. So Dow sort of started this channel. Sort of start of the year, February or so. And then we had gold catch up. But it didn't happen until April. So a couple of months later. And then we've been in this channel. So both been rising up steadily. Grinding higher after this big push up. And will the Dow lead the gold run again and crash down before gold ultimately has its correction? Because not everything can go up in a recession. Everything goes down usually. Only thing that stays up and solid is the dollar, US dollar. And gold, even though it's a safe haven against downturns and debasement and all the rest of it. And recession, it seems to be a flight to safety, but it still corrects. It still goes down, okay, in recessions. So that is, as I showed you back in 2008 there, gold did sell off, all right? So it's not safe from recession. But nevertheless, you got to look at these correlations and they look very eerily similar. And just an idea, okay? Just a chart idea to show you. Next tweet, Emery Zeberg. Update, global Dow. So similar to Dow Jones, this is the global Dow, slightly different. Following a session path for the blow-off top. Still developing. Timing, most likely late October or early November before the top is in. Then it's crash time. All right, so this is chart here. And sort of this channel formation. They've been consolidating up, zigzagging up and down it. And there's 2023 correction, or 2022 should say, into 2023. And we had 2023 correction there. It was very shallow compared to this big one because of the inflation we had and the Fed raising rates. Now it's been rallying, of course, and he sees it to go up the top of this channel, which was formed here and here for 2018, the top, and 2022. And now you're seeing it come up to there in October, November timeframe, which is quite valid. It could happen, definitely. It's not off the cards. It's very certain. If it does come up, it's 1.618 level, okay, which is a common fib retracement level. And that's what he's seeing, is this fib retracement level, right, which is measured from, I just want to see where he measured it from. It's sort of hard to see where he's measured it from, but nevertheless, he's drawn it anyway. I can't really see it, but it does mark this level at 677. It's just top of this channel, okay? So that's what really matters. And he's predicting that blow-off top happens in Q4 of this year as recession kicks in and then we see a big correction. And he's saying we'll see a 60 to 80% drop, which goes back to 2009 levels, which I don't see that is it going to happen. No, definitely not that bad. But anything can happen. Okay, you can't rule anything out. Just give people the benefit of the doubt and give them the chance to show what they see. And it's not just looking at the chart and going, this is what can potentially happen. It's also looking at the fundamentals and the data, the economic data, and how the economy is holding up. And that's what you look at, okay? Not just the chart and these Fibonacci levels and these trend lines and moving averages. That's only one part of the puzzle, okay? You got to combine everything and bring up as much confluence as you can and different factors outside the technical charts, like I said, the fundamentals. So this is what this guy suggests, and he reckons a bit more upside towards the end of the year before a big crash. All right, that's what he's saying. Okay, so on the charts here, and SPX has unfortunately blown through my level at 55.45. I thought it would reject it. And I'll show you on the daily, closer. Had this big sell-off level. This candle broke straight down and retested this upwards rising wedge we made in 2023 and then April this year. And then we came back down to it again, and then we rallied up and then sold straight off this big candle. We came back to it and didn't even struggle. Just went straight through, just pierced straight through that level, and we're heading to the all-time highs. So that is I'll show you what I meant by that. It was the high to this correction, and the 786 level, okay, on the fib retracement, and we smashed right through it. So that is invalidated, and we look to go higher to the top of this, obviously all-time high, or even a little bit higher, fake people out to think, it's the bull runs on, and then boom, sell off. I do see the recession kicking in and a correction to at least 4,600. And if things get really bad, then 4,100 is my level, okay? So I haven't changed that at all. In my opinion, what I see from the top to there, it's an 90% correction and a 27% at the worst, okay? So being a recession, you'd see a 27% pullback. It's 20% correction is a bear market, and 27% is pretty much good recession correction. Not really a crash, but a good sized correction. So 2021, 2022 high to the end of that year. Okay, if I get it straight. There we go. That was 27%, right? So that wasn't even a recession. We got 27% correction. So this is a recession. It should be a little bit worse than this one. And it should be deflationary instead of inflationary, which should bring assets down nice and, healthily correction down to basically 2023, end of that year, at the worst, or at the best, 4,600. All right. You got the NASDAQ, and it's broken through this level and heading up to this level here, to $20,000 level. Okay. Which is from the top to the bottom is a 618, now the 786 level at the top. So you still roll up to there and reject, or we go up to the all-time highs, like the S&P has. It's lagging a little bit behind the S&P, and nevertheless, it does catch up pretty quickly because it's a NASDAQ. It's more volatile, and we should see it go higher. All right. Don't know where the high is. I have no idea. I do have these levels down here, and they're very similar to the S&P, okay, for the 2023 correction there, and in that year, and then we have this top level. Very similar to the S&P, but the top from the bottom, from the very top-ish, it's slightly more correction, 23%, and the lower end is 32%. So slightly more than the S&P. It's more volatile, and a lot of this is driven by the Mag 7 anyway, this rallying. And the small caps are starting to catch up, but only not so long ago. So I'll show you the Russell, and it really hasn't been doing much. This year started here, and it's been trading. So it went up, went down, went up, went down. So it really traded sideways. So from January to here, it did nothing. So June, and all of a sudden, boom, it just shoots up and does a big move. And then we come back down again, and then we come back up again. So it's really just chopped up and down, grinded slowly upwards, but not much at all. So the small caps aren't really participating in this rally throughout this year. 2024, as you can see from here. So I'll just show you from pretty much the third. We're going to go from the very start of the year, the second, from here to here. It's been a 6% move. So nothing too impressive. It's a move nevertheless, but it's not nowhere near, if you get the NASDAQ, look at that one. And from the start of the year, and we'll go from around here, right, to now, or even at the top, where it went to 23%, to where we are now, 18%. So quite a bigger move than the more volatile Russell. And the S&P, it's a very similar move, okay? So if I go back to start of the year there to now, it's 18%. So it's the same thing. It's the same as the NASDAQ, all right? So same move there by the two. And that's they've done outperforming the Russell, but mostly it was around 30% of the Mag 7 performance come from the Mag 7, and that makes sense. And given the AI craze and hype that went into the start of the year and going into now, it hasn't. It started off a little bit, but it hasn't lost its train of thought and discussion. But nevertheless, it hasn't been as hypey as it was at the start of the year. So that is that. Then we have the Dow Jones Transportation Average, and I've just drawn this triangle, which is what I like, squeezing. It's very interesting to me. It's from 2021 top to the lows at the end of 2022. So Q4. That's grinded up, okay, like this. And it's about to break to the upside. Or will we find resistance here? This can be still resistance, all right. This level here on the daily, as you can see, daily closes, and we can still come up and reject, then like fake out from this triangle, come back down, like we did. We faked out here, fake out again and come down, or we reject and then come back down. This is more of a defensive sort of sector, okay, transportations, and we'll see if this goes the upside and breaks higher or rejects in this level. It's only time will tell, but I do see it following, the stock market, the NASDAQ and the S&P, and going lower to lower levels, all right, as the recession kicks in. That is, only time will tell with that one. And you got the housing sector. We haven't looked at this chart for quite a while. This is another chart. And, high. So we touched it a few times. And if you want to draw the bottom line, you can if you really want to, all right, to match it up. And it's pretty much a channel. We're in this channel, okay? And if you want to go back even further, you could, but this was a red line that I drew from a previous video. It was divergence. I'll show you the divergence. And that's on the weekly or monthly, I'm not sure what chart it was. But you can see it's sort of starting to play out. So you see this MACD, so this high went higher than that one, high went higher than that one, and then it started to play it after that. So you had the high, had a lower high than MACD, the high in price, high in price again, then the MACD is going even lower. So the momentum is starting to turn down and diminish, while price keeps grinding higher with very, very low momentum. Eventually we should tick over, right? So we had here, had a high, lower high, and lower high, high, and a flat top, so no difference, and it crashed. It corrected, all right? Here, same thing happened. You had this peak, we had a lower high, another lower high, and eventually just crashed right down. The pandemic, of course, so you had divergence play out the MACD in price, and you go back even further, and it plays it every time, all right? So high, lower high, even lower high, high, and it corrected. Wasn't a big one, but it was a correction nevertheless. And we'll go back as early as 2003. So you had a high, right? Another lower high, high. We had a correction. Obviously, went down to the bottom of the zone. Came back up the MACD. And this cluster of highs, this was lower than this one. This was higher than this one in 2005. And this even went even lower again. The MACD just went higher. So you can see the high, lower high, lower high as you get it, okay? And this goes higher, this goes lower. And then eventually, price goes lower, MACD goes lower. Again, another lower high than this one. And then it just collapsed. And then it went back up again. And then it collapsed again. All right. And as was the great financial crisis, 2008. But the housing market did crash before the stock market did. All right. And that was Kevin. So showing these divergences and similar things playing out. So you got the high, lower high, and another lower. So 3 consecutive highs, which I showed you previously. And will this grind higher? It can, definitely can. And nothing stopping it. But that's the housing sector. Then you got some sectors here that we usually look at sometimes. But XLK versus SPY. So the technology component of the S&P 500. And if you go to the monthly, which is a bit more prevalent, you can see going back to the dot-com bubble, 2000. This was a high made here. And this sector has come back up to its highs. And we've had wicks on the monthly. We haven't closed above this level, all right? So this is the level here. We had a wick and a monthly close here, all right? This is what's playing out right now, as you can see, on the monthly. And we've grinded high up. We had this high on the MACD, high in price. I'll zoom into it. And a lower high than MACD is this red line is forming, and high in price, and as you can see, it's divergence, okay? So it's playing out as well. On the monthly, it's nice and wide. And it looks to be at its final, could push up a little bit more before a quick correction. And it's all over for the technology sector of the S&P. And it's had a big, brutal correction, which is all tech stocks. It's the financial tech sector. And then you got the SPY-G versus the S&P. It's SPY growth versus SPY value of the S&P. So all the growth stocks versus the value stocks. And I'll just zoom in on the weekly, gives you a better understanding of what I'm trying to show you. And divergence is playing out here. You see high, a lower high than that one. High. This red line's drawn divergence. And we've got this bit of a parabolic line I've drawn, parabola. We've respected it here, and we broke down from it. We're coming back up to retest it. Will this go higher? I don't know. To the top, whatever. It could play out, definitely. But we did break the parabola. I thought we were going to continue up, but we did break it. So it's showing some of a weakness there, big sell-off. Okay. Yeah, it's just showing that growth versus value. And value did outperform here, but the growth started to come back up. So the higher risk growth stocks in the S&P, which really is leading this rally in the S&P. It's more or less the growth stocks versus the value stocks. It's not both of them participating, but you have to plot these two. Okay, it's one versus the other. And this rally is being really driven by the growth department, and when this goes down, it's the value leading the growth. So in this big correction, okay, from 2021 to the 2023 low, right? And that year, that was the obviously inflationary crash. The Fed was fighting inflation and value outperformed growth. And then during these bull markets, from 2017 correction, 2020, right, these big moves are really bull markets, really. So risk off, risk on. That's what it is. Risk off, risk on. That's what it's signaling, okay? So getting a bit of divergence and a bit of a push up in growth. We got SMH versus XLP. So it's pretty much the same thing. Risk on versus risk off. Okay. But this risk on SMH is the semiconductor sector, the S&P, versus the staples of the S&P. And as you can see, it's outperformed from this correction to there. That was the inflationary. They were fighting inflation. The stock market corrected. And then the risk on happened at the end of 2022, going up to June, and then we corrected. We had a parabola. Okay, so suspected it all the way up here, and we've broken down from it, and we started to come back up. So it definitely has broken this big momentous uprise, but will this go to the highs? Possibly. And you can see these red lines here. And what does that mean? It means divergence. So you can see there, if you zoom out, the monthly, it's very, very prominent. So at a high, the MACD, at a high in price, at a high in price, slightly lower or flat MACD, which is pretty much, it is divergent, when it's flat and that goes higher. And then, excuse me, the MACD is about to cross over again, and it's lower than this one and this one. And this is higher than this one, obviously. And 1, 2, 3, the 3 drive MACD. When this crosses, it's all over. It's risk off, all right, in the markets. So that is just about to play out and not far from happening. All right, about to cross over. So be prepared, be wary, and be cautious. And the last sector, so the NASDAQ versus the Russell. So the RUT versus the NASDAQ. Obviously NASDAQ versus Russell. And it's been grinding higher. And on the monthly, you can see this high, and it's divergent. So this lower high, it's just crossed. We've had a cross now, and we've had a high. So all is correct. Seeing a pump now, as expected. And because the NASDAQ's been doing so well this year versus the Russell, okay, as you can see, it's outperformed it from start of this year here to here. It's beating it, okay. You can see up from it, but over time, especially from the dot-com bubble, when the dot-com bubble burst, the NASDAQ underperformed small caps significantly. This big crash, and then we had the financial crisis, and the big correction there. It did underperform the small caps, and then it grinded higher. Okay, over time, we had corrections along the way. We had the 2020, and it corrected, didn't do as well at the end of that year. Then it pushed up towards the end of 2021, and then we had that crash, obviously, for the Fed flying inflation in 2022, and then it's been grinding up ever since that. So it's only a matter of time before it does come back down with divergence, as I showed you in the other charts. So it's all playing out pretty similarly, and that is what you look out for, okay? That is that. And that is pretty much the video. You can go over some stocks if you want to. Go over. So you got, look at the monthly. It's really, really zoomed out. And this one here is Parabola, okay? So it's expected it here. And we haven't gone back down to it again, but I could draw this trend line up, and it's been sharply grinding higher, and we just wicked. We haven't closed below the trend line yet. We're sort of pushing higher, trying to reclaim it, and we've got a divergence. So you can see there, it's nice and wide. Okay, nice and wide on the monthly, which is very good to see. But yeah, it's a matter of time before we see a correction in Microsoft there. Same thing. I like zooming out. I'm not showing you the daily. It's happening day to day. That's not really important. It's what's happening now on the bigger time frames, because it's what the big moves come from. The higher the time frame, the bigger the move. Okay, so that's why you want to be prepared for the bigger moves, and they're more respectable. TA works better on higher time frames, so the monthly is more stronger than the weekly. The weekly is stronger than the daily. The daily is stronger than the 4 hour. But the monthly, the yearly, obviously, the yearly candles are even more powerful. But I don't like to go that high because it's too zoomed out. Okay, this is more respectable. And what you can see is a high, a lower, high, and a lower high on the MACD. So you're trending or diverging again on Apple, but we still keep grinding higher. This wedge pattern, we just broke out of it, so it is bullish. We could continue a little bit higher before we come back down to it and then crash. Nvidia, same thing. This one's a bit different. This divergence has been playing out for a while. So going back to 2018, it's had a big overbought really level. Overbought MACD. It came back down. It corrected. It came back up. It crossed. It corrected. And this MACD was lower than this one, higher than this one. I keep explaining myself, but you get the idea. We're diverging right now, but high, lower high, and a lower high in the MACD. High. So we're getting a really extended divergence playing out for Nvidia. And I do see this one crashing pretty hard. This one's been performing very well this year. So if you want to take from January to now, you're up 164%. And it's like top 5 and a very strong company. And for the market cap that it is, it's like 3 trillion market cap or thereabouts, close to. It is absolutely just killing it right now. It's 164% move for the size that it is absolutely ridiculous. So it only results in what goes up a lot goes down a lot. So the more aggressive the move up, the more aggressive the move down. Okay, and this parabola has been playing out from 2022 October, and it's been respecting it and going up. And we wicked down, but we didn't close. Okay, we're pushing higher. So the parabola continues as the price squeezes higher and it goes more vertical. Okay, the more steepness it goes, and it's not going to end very well. So the NVIDIA bulls, Google, another big divergence there. There's a higher than MACD and a lower high. So divergence is playing out again. And will it push higher before going down, or will it find some weakness compared to the other three? We'll have to wait and see there. But it is playing out exactly like the other ones are. Divergence. Again, divergence. Amazon. This one here is at a high, lower high, and it's more 3 drive. So 3 lower peaks, 3 higher peaks. So high, like a mountain, and it goes down the mountain. Snowball rolls down. This goes up, climbs the wall of worry. Okay, and the more divergence plays out, the more likely it's going to play out. Okay, that's happening. Amazon, you got Meta. It's got a nice wide divergence, and it's only a matter of time before it crashes. Tesla is a bit different. It's a little bit funny, Tesla. The way it looks, it's more or less consolidation. Okay, we've been consolidating from 2021. We had a low here in 2023 earlier that year. We pushed higher. We couldn't break these highs. We corrected. And now we're starting to see if we're going to break out, all right? It's because the monthly did break out, but we did have a big wick and barely closed above this triangle. So this will be interesting to see what this month does, whether it closes bearish or closes bullish, all right? So that's what I'm tracking there. And when I zoom in a little more for Tesla, you can see that we are grinding, and there's a level there. Okay, $200, and it's broken above this resistance, broke higher, and then bam, we corrected. We broke below it, which faked a lot of people out. Now pushing back higher again. So that is Tesla zooming in a little more, and yeah, it's just consolidating, and it's just waiting on pretty much the rest of the market. It's not going to run its own. It'll be run with the rest of the Mag 7. Okay, and that is that. So yeah, the stocks going over, and that should wrap us up for this video. So I hope you enjoyed that video, just going over the Fear and Greed Index as usual when I do stock market videos. Going over some tweets by a couple of guys, pretty notable on Twitter, and one's a perma-bear, it seems, and the other guy he just sees a blow off top before a big correction, he's saying on a couple of interviews he sees a depression happening. He's really bearish, this guy. So he doesn't see it being a soft landing for the Fed or the economy. He's going to see a big, hard crash, something similar to 1929, I think he said in an interview, which is quite disturbing. But then that's what he sees. I don't see it being anywhere near that bad, but you can drive a lot of attention, and grow your audience when you're really controversial and overly bearish. And that's what I see he's probably trying to do. And nevertheless, he just gets that clout. And if it does play out as bad as he does see it, good on him. And we even big opportunities to buy the dip, the big correction, big crash. But I don't think getting that bad, guys. I don't see it being nearly as bad as 929 and unemployment skyrocketing to the levels it did. And if it does happen like that, it'll be in I think it was in late that year, September, to 1934. So it's like a just over 3 year. Is it 3 years? 4 years. Yeah, 929 of the year to 934. So it's 4 years of downside action price. That'd be terrible if that happens. All right. So no fun for 4 years. No crypto bull runs. Okay. No hype. This would be the it for Bitcoin. But I don't see that happening. Okay. It's not what I see. But we'll have to wait and see if that one. Okay. There's two ones. And then we went over my charts and looked at different individual stocks, looked at the sectors, looked at the indexes, NASDAQs and the S&Ps and the Russells and the Dows. And that is that. Okay. So I want to sort of structure my videos 3 times a week. So Tuesday nights, stock markets. Thursday nights, Bitcoin. And then Saturday nights. So 3 times. Look at ALT versus Bitcoin. So the collective altcoin market and versus the Bitcoin pairs and the USD pairs as well. And we'll do depth videos on those ones and the stock market. Any news, any economic news, okay, that come for the Fed that comes out in between those days. On that night, I will present the previous day's data, okay, or that morning that comes out the night for me. I'll make a video explaining what the event was about, okay. So the Fed is what to track in these markets going forward, because that's really, really what's holding up the economy is just these flat rates, and when they cut, because of some weakness in the labour market and therefore the economy, and yeah, that will mark a recession, okay. So I'll do a video on the recession too. Let's talk about that and whether I see you in a recession or not, because I did say we are in a recession. We could potentially be in one, but the GDP numbers suggest that we're not in a recession. So we need to see negative GDP numbers before we can really say that we're in a recession. Either a quarterly GDP, so back to back, 2 quarters in a row. Okay, so that's 6 months worth of GDP numbers. Or if it's a negative quarter, then a positive quarter, and then a negative quarter. So it doesn't have to be in a row, but you need to see at least 2, because every other recession in the past has had 2 negative GDP quarters, okay? Every single recession. Go back to the late 40s, okay? That I can see, and the data I can chart, but I can go back even further to try and justify that. But I believe it's every single time they had 2 negative quarters of GDP, yeah, it's back-to-back, or if it's a gap in between, has been a recession, 100%. Okay, so that is what we haven't seen just yet. We've seen that some are all triggered, but we haven't seen these GDP numbers get negative. All right, so we'll discuss that in another video. Now, we'll talk about that later. But anyway, this is the video. I hope you enjoyed it. Please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below also. And I'll catch you the next one. Cheers.